Hello, everybody. I'm Alexandre Kech, CEO of GLEIF, and today I'm with Shriyanka Hore, Global Head of Industry Engagement at Swift. But before I ask her to introduce herself, I'm going to briefly tell you what we're going to talk about today. And it's going to be about cross-border payments, but many other things. As cross-border payments evolve from traditional banking to real-time rails and digital assets, FATF Recommendation 16 sets a higher bar for transparency and trust. In this episode, Shriyanka and I will explore how BIC, LEI work together to meet compliance while enabling efficiency, innovation, and verified identity. Also, with ISO 222 adoption looming and with the deadline of November and growing blockchain interoperability, we will explore how global identifiers help compliance keep pace with change. Welcome, Shriyanka. Can you introduce yourself and the company you work with?
Thanks, Alex. It's such a pleasure to be on Trust Talks with you today. My name is Shriyanka, and I work for a company called Swift. Swift is unique in its own way. We're the only global cooperative that has over 11,500 financial institutions on our network. We operate in over 200 countries, bridging over 230 plus market infrastructures where these 11,500 banks operate. And the nature of transactions on Swift is not limited to payments alone. It's cross-border trade, securities, FX, and payments. And we nearly move the world's GDP every 2 to 3 days. So that's just the sheer scale at which Swift operates. And I love my role as global head of industry engagement, where I get to work with global policymakers, change drivers, amazing organizations like the Global LEI Foundation to enable standardization, regulatory harmonization, and impact at scale.
Well, thanks for the introduction. I obviously know Swift quite well as I've been there as well myself for 18 years in the standards department. So it's always a pleasure to talk to a former colleague of mine, or at least someone from a company that has been very important in my career. Let's jump into the topic of compliance and maybe try to explain to our audience what is the FATF Recommendation 16. So can you break down FATF 16 for our listeners and why it's so critical for modern payments networks?
Thank you for the question. So, let me start by explaining FATF. The Financial Action Task Force is a global standard setter for anti money laundering and counter terrorist financing. The recommendation 16 specifically is one out of 40 recommendations that came out of the FATF. Recommendation 16 is often known as the travel rule amongst payment experts. And what does travel rule really mean? It means information travels with the payment. And R16 or FATF 16 is a key enabler of the layer of transparency in the modern financial world because it leaves an electronic data trail behind every payment that then enables investigators follow up the money trail and identify suspicious activity. Without a global baseline like FATF 16, each jurisdiction would then go on to build their own rules to keep the payment safe, identify suspicious activity, and this would cause a very high degree of friction in payments. So I think it plays a two-phased role. One that the recommendations themselves enable a baseline for global policymaking and secures trust in the ecosystem. So, in over a decade, FATF Recommendation 16 went through its biggest revision, if I could call it so. Um, and it was a recognition of the sum total of all of the changes that have happened over a decade newer actors coming in, proliferation of newer technology, and the recognition of digital asset platforms, crypto asset service providers, and the fact that payments are no longer cross-border payments are no longer wire transfers because the baseline version of recommendation 16 had the same recommendations worded against wire transfer. So today it's opened up to basically reword it in terms of value transfer, which I think is a recognition of the changing nature of cross-border payments itself. And then it goes on to outline a number of different recommendations. I can go on to explain a bit more about each of these recommendations, but if I were to zoom back and give you the top highlights, it would really be about bringing traditional payments and decentralized finance or the crypto world into a same level of same business, same risk, same regulation. And it went on to mandate the nature of screening, clear accountability between parties, and outlined the necessity of using global identifiers such as the Business Identifier Code, the BICs, and LEIs, and any other unique digital identity identifier that is issued. So that's the nature of the recommendations to give you a sweeping 360-degree view of why we're talking about FATF 16 today.
That's perfect. I couldn't have done a better summary of what FATF and Recommendation 16 is. Let's deep dive a little bit on the focus of FATF on originator and beneficiary transparency, which is actually driving the need for global identifiers like the BIC and the LEI. Can you tell us a bit more why this is so important to understand who the originator and beneficiary of payments are?
Super. I will do that because I think often when you look at a payment, there are two transacting parties, the sender and the receiver ultimately. But the way a payment moves, it moves through multiple actors. These are parties that provide liquidity, take on the risk, and sometimes are simply nodes in the ecosystem to route a payment through. So, the importance and the accountability of these actors, whether they're transacting parties or they're routing parties or payment handlers essentially in a chain, to be identifiable, to be verifiable against global unique identifiers is supremely important. And what the recommendation does is basically it outlines that there has to be the electronic data capture against name, data, address, and the unique identifiers, which I've mentioned before. So that's what is essentially being spoken about at large. But traditionally, the traditional ecosystem, right, we're moving from MT to ISO 20022. This is not new in wire transfers or traditional cross-border transfers that happen via the SWIFT system. But what it does is it also enforces the same rules of accountability on newer actors. So, what FATF does is ensures that these jurisdictions look at traditional finance and decentralized finance in the same light and imposes the same level of data standardization against newer platforms and newer business models.
I can talk to that. When I moved out of Swift to the crypto world, actually, to create a crypto custodian, the travel rule conversations actually started quite quickly after, around 2019, 2018, I would say. And one of the challenge for crypto service providers was to make that information travel alongside transactions that happens on blockchain, knowing that you cannot transfer that information on chain because it would be visible, and we're talking about sometimes PII information. So for a long period of time, there have been an industry attempt to create a standard, largely based on the ISO 20022 standard, called the IVMS 101 standard, which has evolved since then. And interestingly, it was obvious to the users or to the builders of that standard that the LEI and standards like BIC would be really useful in that space as well, because they are global identifiers. And being global identifiers in an industry that is cross-border by nature, it made a lot of sense. There was no question about using other type of identifiers, but the ADI was clearly mentioned as one ideal identifier for such cross-border activities. So now that the travel rule 16 and the FATF recommendations are aligned at the end of the day also with the industry practice, I think we're gonna go into an implementation phase that should last, I believe, until the 2030, where my understanding is that each jurisdiction will translate those recommendations into their own rules and laws and implementations to enable their domestic markets they supervise to comply. Am I right is it the right description of the next steps?
Absolutely. I think the 2030 deadline is what is been hinted at, but it is still awaiting more clarity from the CPMI, which is the body that will kind of outline the plans for that implementation. And overall, I think apart from the specificity of the information, it also kind of recommends pre-validation checks and post-validation checks, and that is going to be another implementation that we need to see how prescriptive the policymakers will be around that pre-validation and post-validation. Because even when you look at pre-validation, you have verification of pay, you have confirmation of pay schemes, and these are taking different shapes and forms in different jurisdictions. So the ability to do that at scale and have some degree of standardization is a different challenge. But again, between now and 2030, much can happen.
Absolutely. And there's some work to do, to the point that both Swift and GLEIF published a paper recently on the need to clarify the usage of BIC and and LEI in cross-border transactions, because they are still open questions. BIC and LEI are complementary by nature. They're not like competitors. They bring different needs into a transaction, like cross-border payments. How could you expand on how, in your views, these two standards complement each other in practical terms? And I can share my view if we disagree afterwards.
No, no, I don't think we're going to disagree. I think it's interesting because you use the word competing with BIC and LEI, and often, even when I look at or read policy literature, uh, it reads like global identifiers such as BIC and LEI. It's a little bit tossed up in the air in terms of BIC and LEI in the same light, but really they play two very different purposes. If you look at a legal entity identifier, right? Let me start with LEI and attempting to talk about LEI, and you can always correct me there, Alex. The legal entity identifier is not limited to a payment chain or to routing of transactions or to identity and verifiability alone in a transaction chain. So the legal entity identifier has a wider role to play in terms of um, being able to identify, verify legal entities, not limited to businesses alone. You can even have a person who is operating in a business capacity, an individual that can be assigned a legal entity. And if you think of a bank could have multiple BICs in country. Now, the BIC is traditionally been used to get access to critical infrastructure, to basically act as a routing node, and to identify and verify that this is a trusted party in the chain, whether you're acting as an intermediary, whether you're providing the settling party or the forwarding party. The BIC plays a very different role, and sometimes it's granular to the level of the branch that is handling it in a larger banking legal entity structure. So you can have one LEI of a bank operating in country, but that could be mapped to multiple BICs or branches of that bank in that country. Similarly, you have corporates who originate payments on critical infrastructure. These are businesses who have a BIC assigned because they're critical originators. But you can have the LEI mentioned in the context of a corporate, and this is a transacting party who is transacting with another corporate or an individual on the other side who might have an LEI. So they are very different in terms of the granularity, the purpose they serve, and in terms of the hierarchy, in terms of identifiability and verifiability ultimately. In the way I look at it, I don't know if I've missed anything, Alex. Happy for you to compliment.
No, you're right. On the individual side, I just want to reaffirm that we're talking about individuals acting as a business, so a sole proprietorship, for example. But I wouldn't be able to have an LEI myself uh, uh, if I'm not acting as a legal entity. So I think it's important to clarify there. But otherwise, I agree 100% with what you just shared. There are different levels of granularities. There are different purposes as well, routing purposes for BIC that LEI would not be able to enable, for example, in payments. And I think it's so important. That's why it's so important that both are viewed together and not against each other. And by the way, Swift and GLEIF have been collaborating for many years to make that interoperability between BIC and LEI a reality and actionable. So, as you know, as you may know, our dear audience, but I know you know, we have a BIC-to-LEI mapping file which aims exactly at doing that, at ensuring that you always have clarity to okay, this legal entity has multiple BICs. Here they are, and and this is how they bridge or interoperate at the level of the legal entity identifier and the legal entity itself. So, how do you see the role of Swift and GLEIF maybe in the future in terms of making that interoperability possible? So, we talking about the BIC to LEI mapping files, but maybe you have other ideas on how we could work together to enable that interoperability.
So maybe I start with the big LEI file. Uh, I think it's a very critical piece of work that can, first and foremost, it's an open source file that is sitting out there for people to understand why the cross reference exists and how it can be used. And the mapping is vital because there's been a lot of time and effort put in by the organizations to actually create that structure and to make it a source of truth to identify how BICs sit inside a larger legal entity. Organizational structures are very dynamic. There could be mergers and acquisitions or changes to the nature of the legal entity. You may use the same BICs to route, but it could completely change. The legal entity ownership may have changed in the background. So I think all of this is very critical to identify risk exposure, ownership, where the assets really moving, and the tracing the not just financial activity but also risk exposure, in short. And in terms of the GLEIF and Swift work that's been done, I think it's just the continuity of the work that Swift has already done and will continue to do, which is basically make markets and entities interoperable. And increasingly, as I look into the future, identity interoperability is becoming increasingly important as we move from electronic to digital, as we move from you know larger payments happening only between corporates to a much more real time cross border flows. uh, the identity interoperability plays a huge role because now markets are reachable not just through banks, but markets are reachable through the last mile of digital public infrastructure. And that digital public infrastructure is layered. It has an identity ecosystem, it has an infrastructure for payments, and then it has a whole ecosystem of digital players that kind of feed in and interact with this in the domestic jurisdiction. So, to be able to move value to a wallet, to be able to transact against a tokenized asset, or with a legal entity in a jurisdiction, the ability to identify it at a global scale and to move money and assets in critical infrastructure like SWIFT, I think identity forms the very bedrock of interoperability as we look into the future.
Absolutely. So currently, there's a big migration happening at Swift called the ISO 2022 migration. The deadline, I think, is November. The ISO 2022 obviously bring, and I've worked on it, so I can talk from a practitioner experience, brings more data accuracy or more structured data opportunities for banks, but not only, yeah, for to move information in relation to payments, such as, of course, identification information, but also even invoice information and so on and so forth. Um, we This always leads to interoperability challenges, obviously, of various identity scheme, as you rightly pointed out, and the same for other data sets. So, how could you what's the role in your view of companies like Swift or and GLEIF to support that interoperability, for example, by providing clear guidelines on how to use the BIC versus the LEI, for example, as we just discussed, and 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 how do you see that work evolve, especially as you rightly pointed out, payments are no longer between banks; they can also involve non-bank PSPs and digital asset platforms. Uh, how should we work differently in the future to keep that interoperability that already exists today and works up to date, if you wish.
So maybe I break this into two parts, right? So let's look at what lies in the future. So being able to tap into the current move to the rich data standards of ISO 20022, we need to look at the existing data set on existing platforms and look at how better those particular data fields can be enriched with codified um, data sets. And these data sets are not limited to identity, it could be the purpose of a payment, and so on. And today, the challenge that sits with us as an industry is being able to crack that. So, the banks have moved their systems to ISO 20022 enabled systems post November. The critical infrastructures will be able to carry ISO data. And then you have last mile or RTGSs moving to ISO. You have instant payments that's opening up to cross border and moving to ISO. But still, there remains a very high degree of friction which is involved with manual checks. Now, these manual checks are either in the nature of screening or it's always a risk first approach. So it could be screening. It also could be to verify the true purpose of a payment. So somebody would actually give a call to the end beneficiary to figure out A, that the purpose is valid, and the party is the right party receiving it. So, so for these two angles, global identifiers can make a huge difference in terms of identifiability, verifiability, and ensuring that there is no sanctions evasion. And the purpose of a payment, I think there is a lot of work to still do that because the data sets around purpose code are very fragmented at the moment. And these are critical because they kind of tie back into regulatory reporting and go on to do the balance of payment reporting for a country. So there are central bank imposed rules in terms of how that reporting takes place. So the codification is still, in progress. It's going to take some time, but I think the value that can be unlocked or the friction that can be eliminated is huge in terms of the existing step.
It's kind of a cleanup exercise that needs to happen before the full benefit of 2022 and standardization is taking place, right?
Absolutely. I think it's also an incremental learning in terms of analyzing as the migration happens and as the data volume builds up, you can then kind of analyze and determine forensically where are the gaps, where are the divergences, and where does action need to take place. If I look into the future, on the other hand, which is basically the proliferation of platforms, this is where we're talking about traditional meeting future. This is where we're talking about electronic and future distributed ledgers, everything combining together. Because ultimately, it's the banks. I mean, on one hand, you may have newer actors, but it is the big banks who are taking on the risk, providing liquidity, acting as the settlement node, and so on. So, in these newer platforms, the ability to identify in real time and verify on chain becomes critical. And I think this is where it's not just about identifying a BIC against an LEI, but also transitioning to the future of what can be done with the LEI into a whole virtual LEI ecosystem. I'll let you talk about vLEI a little bit, Alex, because I think that there's a huge potential that could be unlocked in terms of taking real world verifiability into verifiability on chain.
Absolutely. So that's a good uh, segue to what I wanted to talk about, which is looking ahead. So what's the future? How the future looks like? What is the future that we will need to implement in a more and more digital world? And clearly, that's what we and my predecessor Stefan and the team understood 3 to 4 years ago when they uh, started looking at digital representation of companies or legal entities on digital platform, and more importantly, realize that companies don't sign documents or don't take decisions or don't initiate transactions. Actors, so people at or systems acting on behalf of those entities are taking those actions. And with the rise of impersonations, of scam, of fraud that the digital world is also bringing, it doesn't bring only innovation. It also brings a lot of fraud, because we don't see the other side of the transaction anymore as we used to in a traditional, I would say, hand-to-end physical payment, or going to a shop to buy a product. We need to be we need to upgrade our identification system to an environment where verifiability of the counterparties and the people acting on behalf of that counterparties can be done. And that's where vLEI, the verifiable legal entity identifier, has been created. It's really aiming at organizations. It aims at ensuring that organizations can verifiably prove who they are on whatever platforms they are, and also people, and in the future AI agent acting on behalf of those organizations, to prove they are legitimate in and have received the authorization from those organizations to act on digital platform. That's really where we're going. It's essential for digital assets, but I think it's also essential. It is essential for the interoperability of various platforms, including the SWIFT platform, maybe in the future. We've been in discussion, and I think we will continue to be in discussions on seeing how the identity system that the digital identity system that exists on the SWIFT digital platform can interoperate with the vLEI, which is platform agnostic, to enable that bridge between digital infrastructures, between digital islands, in the future. What's your perspective on that, if I may ask? I know that you're not necessarily familiar with the technicalities behind the vLEI, but conceptually, how do you perceive the vLEI and its benefits for the future?
Look, first and foremost, I think the whole concept of LEI to vLEI in a cryptographically secured version of the LEI in itself is very exciting. It could emerge as a game changer for compliance because you're able to verify on chain. You're circumventing a huge part of this compliance process within banks by simply that that ability to verify on chain. And if you're able to do it at scale, I think there is potential in terms of circumventing cost and embedding a layer of trust in the transaction itself. So when I talk about that, I'm really moving on to think about programmability, because I think that's going to be the true essence of how a vLEI will actually unlock scale, if you ask me. But in terms of the overall future of digital identities, I think today that the shift is yet to come. Right today, identifiers in general are a compliance obligation. Right, that's why we're talking about FATF. But in the future, it will be a core enabler of frictionless payments. Right, so that for that shift to happen, I think a to understand and demonstrate at scale what is the true potential of this reusable decentralized credential called the vLEI. How does it not just sit within platforms but also exist outside it? And you could think of taxation regimes, jurisdictions, all of those kind of things, and the richness of a vLEI, bringing that into a platform. But in general, privacy preserving identity models with selective disclosure, zero knowledge proof, and the concept of the decentralized identity itself, that's going to be the norm. Right, today we're talking about it, we're trying to justify why vLEI, but if I look 5 to 10 years down the line, I think that's going to be the norm of identity ecosystems in general.
And for that to happen, we need obviously partners to work with in piloting, proof of concept, in doing hackathon. And I want to take the opportunity to thank Swift for having included LEI and vLEI into their business use case for the Swift hackathon for Cybos this year, and also to hosting our vLEI hackathon we organized with Chainlink for the space of digital assets in New York in November. So it's always great to have great partners like Swift who understands, like you do, where the future lies, and are willing to support the deployment of such solutions, which will be beneficial for everybody. I would like to ask you a last question, actually, as we progressing well into our uh, scripted questions, which is the very last one, because I think we've covered pretty much everything. So, what would be the one thing you would want our listeners to remember from this discussion that we just had?
That's a tough one. I need to go back and think about all of the things that we've spoken about today. But honestly, one big thing away from today's conversation, I think it would be that Swift continues to be the very same organization that it was meant to be 52 years ago, enabling interoperability between markets, currencies, banks, and even in the new world, we continue to play that significant, invisible role in enabling interoperability between digital islands. This extends even to the whole world of identity ecosystems, and that is where we're working jointly with the Global LEI Foundation and with global policymakers who can drive that change and enable a seamless, standardized ecosystem of interoperable digital identities.
Perfect. Thank you so much for your time, Shriyanka. Thank you for very much, and I will be seeing you at Cybos very soon.
Absolutely. And thank you very much for giving me the opportunity to be on Trust Talks. And because the word trust is in the name itself, the last thing has to be that GLEIF and Swift will continue to work together for all our listeners to enable trust and resilience in the financial ecosystem.